the S&P 500 is like a perfect proxy for inflation. I think is what we're saying, and the median U.S. real estate is as well.
Totally.
However, there are scarce assets that then outperform inflation. So, for example, median U.S. real estate went up about 40%. Austin, the fastest growing city in the United States, for the last 20 years went up about 40%. But homes on the lakefront on Lake Travis went up 150%.
Yeah.
Right. So sort of the S&P 500, which the Magnificent Seven sort of make up and drive that, have kept up with inflation. A few will outperform it for certain periods of time if you're a really good trader.
Exactly.
Right.
Exactly.
Okay. But then contrast that to, okay, so I am an investor, or I'm just a regular person, I'm a doctor, or whatever. I'm making money. I have savings. I want to protect that savings from being debased. And so I can put it into NVIDIA, Facebook, et cetera, and hopefully that will at least keep up with it, potentially beat it. Or I could put it into XYZ Bitcoin company, which is also a tech company, which is also hopefully going to beat it. I mean, so what's the really...
So what's different here is the $900 trillion of global wealth. Imagine you have a percentage of that ledger, right? And you could say, like, if Mark Moss has $1 million, you could just calculate exactly what percent you have of that ledger. If that ledger is 1.5 quadrillion tomorrow, because there's a whole bunch more manipulation of money, and your part of that ledger doesn't go up by that amount, you lost money, but you didn't know you lost money.
Sure.
That's what you're living in. And that's what everyone is pricing theirs in. And when they naturally say, what is Bitcoin price in this ledger? They're making that calculation error. When I say it's staying decentralized and secure on the base ledger, then it is inevitable if it stays decentralized and secure. It reprices everything in the 900 trillion. So you could say, how much of a percentage of 21 million do I have for all of time? And compare and contrast how much do you need for your lifestyle. If you can hold it decentralized and secure, it will reprice everything else. So then your next question, I think, is why would I invest if I can invest in that asset? Essentially, if I can own the new internet, not just the value on top of it, but I can own a piece of the new internet and all future value accrues to me. Or said another way that I like to say it is, if prices should fall to the marginal cost of production, if the free market is deflationary, then the only thing that can measure it is a fixed currency. So in other words, all things forever, if you measure in Bitcoin, will fall in price at the same rate they should fall in price.
As long as it stays decentralized and secure.
Right. And so now, and the only reason I say if it stays decentralized and secure, I think it's almost inevitable, or a point something, one probability that something could break it. Why I say if it stays decentralized and secure is so people do their own homework on why that's inevitable. Okay. So because they need to understand this asset class is different than anything they've ever seen, and they're through the fiat machine of manipulating money, they won't see what's unique. They have to do the work, because all of the information that is in the fiat machine would try to stop this from working.
So then. First of all, for the listeners, of course, Jeff and I agree on this. I've been an advisor for Trammell Venture Partners for about 2 years, so I look at all the Bitcoin-only VC stuff, and now I'm a partner with the Bitcoin Opportunity Fund with our mutual friends, James and David and Larry and all those guys. So we're also investing in the Bitcoin space as well. But just to kind of understand this point for everybody that's listening, and even for myself, to be honest with you. So we go back to sort of investing into NVIDIA or Facebook. And hoping to beat inflation, but I'm perpetuating the same system, if you will, so whatever. Or I could invest into XYZ Bitcoin company, Anchor Watch, I mean, whatever you name it, right? What down the line. The mechanism is the same. I'm still investing my money, whether that be dollars or Bitcoin, into a company, hoping to beat inflation. I'm guessing what you're saying is the difference is how I'm measuring that money. Am I measuring it in US dollars, or am I measuring my return in Bitcoin?
Yeah, so in NVIDIA, their free cash flows are in the dollars that are being diluted. And so your entire investment is in the debasing currency, and in this, it is not. So if you're creating, so what I think is happening in our companies and some of the companies, if you see and by the way, and this isn't just our fund. Let's say there's lots of funds in this space, at least the Bitcoin only funds that understand this. You're in venture, you can actually get venture returns on top of a venture asset.
So you're getting Bitcoin returns as opposed to
exactly.
returns.
So our companies are by creating the enabling foundations of the things that drive, just similar to the internet. But if you owned a piece of the internet, and then the returns, and we're collecting more Bitcoin because of the value that they were creating. And if you see some of the rates of the growth of the companies, measure in their balance sheets moving up by acquiring more Bitcoin because it's denominated in that and their transactions are based in it. You have an underlying asset that I like to look at it as it's not going up forever. All prices are falling against it forever. But now you're collecting more of that underlying asset. So you can by having successful companies. So I believe we're going to have venture returns on top of a venture type asset.
Right.
So when I think about that, I think and I can't believe everybody's not here. I can't believe there's not more people understanding this because I can prove what I just said because it's repriced every other asset class over the last.
The critic would say over what time frame, right? Obviously, over the last 15 years, it certainly has. Over the last 2 years, it hasn't, right? So,
but any 4-year cycle, it has.
Right. And
any 4-year cycle.
Obviously, as a venture investor, like we're thinking long term, 7 to 10 years, typically at a minimum, right? So to your point, every 4 years it has. And so if you're thinking, and I say all the time, I mean, if you're marking your portfolio to market on a monthly basis or a quarterly basis, like you're never going to make it. Like Charlie Munger said, the big money's made not in the buying and the selling, but in the waiting, right? So waiting for that to develop.